Good evening to everyone joining us from India, and good morning to everyone joining us from the US. A very warm welcome to all of you. Thank you for joining us today. Artificial intelligence has become one of the most talked about topics across every industry, and finance is no exception. It is transforming the way finance teams work, make decisions, and create value. But as AI continues to evolve, one question remains: will finance professionals adapt and lead this change or risk falling behind? This is exactly what we will explore in today's webinar as our experts share their perspectives on how AI is transforming the finance function and what finance professionals need to do to stay ahead. Before we begin, a quick housekeeping note. Please drop your questions in the Q&A section at any time during the session. We will try to address as many as of them as possible during a webinar. Now, let me briefly introduce SW. SW is a global assurance tax advisory firm, part of SW International, present in over 25 countries and among top 20 global firms. SW India has unique capabilities of serving not only Indian companies but global companies all across globe. We serve Fortune 100 to 500 companies and mid to small size companies across globe. Let me begin. It is now my pleasure to introduce our moderator for the today's session, Kunal Mehra, Managing Partner and Co-founder of SW India. Kunal leads SW India's vision of building a globally connected professional service firm, a chartered accountant with over 26 years of experience. He advises multinational corporations and high growth businesses on complex business advisory matters. He is passionate about innovation, global collaboration, and preparing business for the future of the profession. Now, it's my privilege to welcome our distinguished guest speaker. Our first speaker is Alan Colton, CEO of Colton Consulting Group. Alan is one of the most influential voices in the global accounting profession. He advises leading professional service firms on strategy, leadership, governance, growth, and merger and acquisitions. For 26 consecutive years, he has been recognized by Accounting Today among the top 1,000 influential people in the accounting profession and is widely regarded as a trusted global thought leader. Joining him is Brian Colton, Chief Corporate Development Officer at Colton Consulting Group. Brian leads the firm's strategic growth and merger and acquisition advisory practice. He is certified public accountant. He works closely with professional service firms on growth strategy, transaction advisory, and business transformation, helping firms prepare for the future. A very warm welcome to all our speakers. And with that note, I will hand over the session to Kunal Mehra to lead today's discussion. Over to you, Kunal.
Thanks, Manisha. Welcome, Alan. Welcome, Brian. Look forward to our discussion today. I know we will try to cover whatever best in terms of explaining people or giving view, but there will be a lot of things we may not be able to give the clear answer on that because technology is evolving. A lot of things are evolving. It's not only technology. So, Alan and Brian, I think objectively what we are trying is to cover two part of the subject matter from a business point of view and the people point of view. Is one is accounting firm and the clients of the accounting firm, which are companies, and say example the CFO people and the CPA people. So that's where we have the audience, and we are trying to cover the aspects which the AI will have impact on the both side from the role perspective, because accountant has different roles, CPAs and the CFOs will have different role, and obviously the business model has to evolve depending upon ourselves. So that's the, I think objectively we'll be covering in our discussion today. So Alan, if let me if I can start with you. So if you have to give one big statement about the AI, so what will be the big statement you will have?
Yeah, I think it starts, and Kunal, first of all, thank you for having us with you today. We listen to every one of your podcasts. We put them out on social media. We love them. You and your group have become such amazing thought leaders to the profession globally. So thank you for including us. I'd start with a broader statement, and that's we always say is the hourglass half full or half empty. It's contagious enthusiasm versus fear, fear of change, fear of not having a job, all these things that go with it. And I believe when the dust settles, we've had technology ever since I've been in the profession,
Yeah.
over 4 decades. And somehow we always come out of it raising our rates. It's, and this will be no different. However, all of that being said, I believe that this will go down as the biggest single transformation of the accountant over the last 140 years. We've always had a moniker. I know when I was in the 1980s, and Brian, I realize that was before you were born. Um, we prided ourselves as a quality CPA firm until everybody said they were one. In the 90s, we prided ourselves as a technology firm that does accounting, tax, and audit. In the 2000s to 2010s, we became known as this firm that has a family feel. We'll hold your hands, client. We've got a family-friendly culture. Every decade there's something new. But the one we've hung on to the longest is that we are the client's most trusted advisor. And that's the one we take to even today.
Yeah.
And I want to challenge that thinking. And I want to say the following: as a buyer of accounting firm services, if I don't trust you, I don't use you. And that will no longer get us to the dance. Where we have to migrate with and through AI
Yeah.
is moving to become the client's most valuable
Yeah.
advisor. Trust is just a given. So that's what AI is going to do. In its simplest form, it's going to take billable hours away and get them done at a much lower price. Yeah,
No,
I'll stop there.
no, I agree, Alan. I think you are right. There are, I think, two aspects which are very important you mentioned about it. One is this is one of the biggest technology transformation, especially in our profession and otherwise also is happening in last 140 years. Although Brian and myself have not seen the era you have seen before our birth also. And I think, and the second point, which is very important and foundation, not just for a technology perspective, we as even for the finance people also, and even for people like us who provide services, that trust that we are in the business of trust. We are in a game of trust. We have to. This is the foundation. We have to keep that intact. Obviously, that trust is basically you you provide solution to the client, you solve their problem, and that's why they come across to you. If you are not able to solve it or you're not able to help them, they are not going to across to us. We are irrelevant for them.
Exactly. Yes.
So, so Alan, let me Brian, what is your big statement on AI?
Yeah, I take
Because
it from a
you are the
Mhm.
sorry we
Yeah,
you are the youngest among us, and I know Brian. Alan told me you were the other side.
yeah, I
What
take it
me
from
and
a different standpoint there, where when I was in school, I did a MBA program that was focused on accounting, financial analysis. So it was probably, say 64 of the most interested students in accounting. And of those students, it might have been 14 that wanted to do audit or tax. People wanted to go into banking or transaction advisory, areas that were not as much compliance heavy. I think a lot of that was when they talked to their peers a year or two older, those peers would kind of say, the mundane work that they were doing, they did enjoy it. They were trying to get to the next level as fast as they could. I think AI taking away a lot of that work changes the mindset entering into the profession. So I think now for CPAs or aspiring CPAs, this is the greatest time to become an accountant.
No, I agree with you. It comes with a lot of opportunity and challenges also. Who is able to able to overcome? But I totally agree with your statement, Brian. Like I think NNL also done. I have also done a lot of the manual work, tedious work, which I don't think this young generation will be required to do again in their life. So, Alan, just coming across to you, I think I agree with you that this is one of the major transformation which is happening. But there are other people or different people who are on the other side of the table, which is like, for example, if you see last 30 years, there in our profession or the finance profession field, there are two major innovation I can say. One could be ERP, which changes the accounting part of the corporates are concerned. And other could be the tool called Excel, which did a lot of automations and helped a lot of work to be done and all that. But they say that was also a change, but it has no impact. What is your view on that? What you would like to say to such people?
Yeah, I think we should. I'm not sure what the phrase is, the moose on the table, the elephant in the room. It's always the sensitive item. And the sensitive item uh, begins with the letter E, and it's called evaporation. Evaporation of billable hours. And you're seeing it play out already in terms of trends, starting with the big four. Rare is it if you pick up the Wall Street Journal or Financial Times, you will see an article for sure in the last couple of months of big four equity partners being asked to leave or retire soon. And the simple truth I think that no one wants to talk about is those hours are going to move from the human being
To the technology.
to AI.
Yeah.
And the positive of it is it's going to finally free us up from making the product to actually spending time doing what we were ordained to do. And that's to be in the business of helping our clients with their business and financial problems, whatever they may be.
Yeah.
And I would offer up there's three kinds of partners in accounting firms today. There's the natural advisor who does billable work. That one is going to soar because they're going to now have more free time for
Yeah.
planning meetings with clients from that cross-selling services, from that building deeper relationships, which will get more referrals. It's that highest and best use of time. I think the middle third of partners, once in a while, reactively, a client will ask them a question, usually out over a dinner, and they'll come up with a brilliant answer. And as they're driving home, they're saying, wow, I got game. I'm pretty good. I think that's one that, with some skill building, and I know we'll talk about that later, what are the skills we need to build today to be better tomorrow?
Yeah.
But I worry about the last third of partners that are what I'll call the pure grinders of the work. And the exception to that would be if they had an industry expertise. Industry experts will always trump everything because they can charge more because they're a famous firm, a famous person. But that's why the big four, starting with them, and trends work all the way down the food chain, are beginning to see AI not just doing the mundane, but going all the way through the food chain and saying, we've got too many partners. And if that's all you're going to do, you run the risk of becoming extinct.
Yeah.
Now, I know we want these podcasts to be uplifting and motivational, and that may not be a motivational statement,
Yeah.
but let's think more about that. Yeah.
No, I think you are right, Ellen. I think I would not use the strong word, but it could be automation of a manual work, or there was a lot of inefficiencies, which is not in the accounting firm also. Even so you see the companies, a lot of people, the CFO is struggling just for the monthly closures and yearly closures and audits and everything. But just for the sake of information and closing, not the strategic point of view. I think everyone has to align to the new world that you are here for the top of the game. Less focus on top of the game. This is all manual work. Maybe was a problem statement till now is not going to be a problem statement for the future where you can get the money out of it. It will be very difficult, next to impossible, I think.
Yeah, yeah, completely. You know, it's interesting with Brian, and I know some of you think he's my little brother. He's actually my son. Um, sometimes Brian will say to me, "Dad, you're listening, but you're not hearing me." And and I think when I talk to his generation, that 20 something and 30 somethings,
Uh,
they're starving for something more than just the compliance work.
uh,
And everybody has their theory of why enrollment in public accounting has gone down. I think the simple answer is two things. It's we're not paying them enough, and the work is not challenging enough.
uh,
And this is a lightning rod. I just think we as the profession have to do a better job of educating the kids that you're going to have AI agents at your disposal
uh.
to do that work so we can get you in the fire that much sooner.
So,
Yeah.
Alan, before I obviously it will be interesting to take the view of the brand, but one question before I switch over to ask Brian. Do you, I think I know you speak with a lot of managing partners and CPAs of the accounting world. Do you think they're more in majority, not everyone, they are aligning toward the shift, or still they are in doubtful stage? Or and the second question is more important, which is I think very difficult, but still, if someone has able to find out a clear strategy to be winner, that will be a great situation.
Yeah. So this is going to age me, but 45 years in the profession, over 135,000 hours studying the brain of an accountant and the brain of
Oh,
accounting firm leaders and partners. And the phenomenon I've learned about change is change doesn't happen unless the change itself is deemed to be better than the status quo. What I'm saying is, if you look at the last 3, 4, 5 years for most accounting firms, profits are up. Life is good. Yes, they're killing themselves to get the work done, but many of them have not yet seen the storm coming. Their head is still in the sand. But many firms are making deep, deep investments in AI technology. And while we may not see it, I can name off many firms, and size doesn't matter, industry doesn't matter, geography doesn't matter, where 20% of that work is now being done through AI technology. Kunal, today is July 9. I hope it's still July 9 by you, but
yeah, yeah, still.
It's July 9, 2026. I promise you, I won't be on the call with you in 4 years. I'll be on the beach, but Brian will. And you can replay this by July 9, 2030. Accountants worldwide will no longer be preparing a financial statement or tax return. It will all be done through AI and offshore.
Yeah.
And it begs the question, how will we and what will we be doing to replace that time? You can look at that extremely positive, and you can look at that statement extremely negative. But the change will happen with or without us. What's the thing we always talk about, Kunal, on our calls? When the change outside the boardroom is happening faster than the change inside the firm, it's only a matter of time.
No, no, obviously. And I think last point, if our clients are going to change it, then you will have no option to be forced to change also if you want to be relevant. So, Brian, I think me and you are definitely going to be, have this call on beach with Alan on 2030. Not. So, Brian, let me come to you. Your point of view. How do you think AI is going to have impact both from, I think, from an opportunity point of view, from a disruption point of view, or from a change point of view also? I think disruption, I will put a context for you. That disruption is from the point of view, a lot of technology companies are coming up, which are getting into the solutions of which we are doing it. There's also a debate whether they can independently do the job what we are doing or not.
Yeah, I think it's a big question. I might go on a little bit of a
Yeah,
long-winded
take your
answer
time.
here, but yeah, I mean, the impact, it's significant. When I talk to firm leaders and leaders in AI strategy and implementation, we're seeing AI impact, meaningful portions of areas. Just to name a few, there's tax research, tax return preparation, bookkeeping, audit documentation, financial statement preparation, and I could go on giving a lot more. And with this, kind of what we talked about is the historical, staffing pyramid, where firms relied on a large number of junior professionals performing repetitive compliance work, beginning to change. However, with all this change happening, I think the opportunity is even bigger than the disruption. AI will allow accountants to move up the value chain much faster. So instead of having to spend hours gathering information and doing the mundane work, these repetitive tasks that we kind of talked about, professionals can now spend more time interpreting results, advising clients, solving business problems, and building relationships. This is the type of work I want to do coming out of school. And I think this is a similar mindset to a lot of other accountants. While AI is an efficiency tool and it's going to improve margins and it's automating work, it's going to accelerate these younger accountants' developments to trusted advisors earlier in their career. So ultimately, I think the profession and with because of this impact, what the opportunity will be is shifting the profession from producing work to creating value, becoming true business advisors to your clients.
So, Ben, I'll obviously going to ask this question to Ellen also, but from your perspective, I agree with you. It frees up a lot of time. It gives you more opportunity. I think I would say it gives you a sea to swim. Earlier, we were supposed to be in pound only. Now we have a sea to
Hmm.
swim also, but it's not easy also at the same time because point is say example, I used to be doing audit, I used to be say filing tax return or advisory also. I have time. But now what new services I or capabilities I can build, especially people like you coming new in the profession, you have to start from scratch and you have options to build in terms of capability and offering to the client. People like say who are in the age of 40 to 50 who has already spent 50, 20 years, what change they have, the options they have to change also is another challenge for that young people definitely, but we are missing the people who are the middle age also.
Hmm. Yeah, I mean, there's, in terms of the work that, I would want to be doing, it's the getting to go out and building the client relationships, working with them, understanding their problems, whether that's personal or business problems, and getting to, solve those problems. The work of, behind the scenes of solving them, that could kind of get taken out now. So I could start interpreting the results and, bringing it to them. I find that work extremely exciting.
So, Alan, let me come to you. I think a lot of people, including myself, will agree that by 2030, all these financial statements, tax returns are going to be 100% not require any manual intervention, and maybe a lot of more, many more things also. But what should we do next? That's a question. In
Yeah.
terms of real service, because the I think I'll give you another because whatever the advisory work we say, whatever people were doing, that's okay. But I think the very core advisory work being done by the firms like McKinsey's and Capgemini and a lot of other. which has a different business segment, capability, skill set. Like people like MBA, people were generally doing that kind of work. So how do you think we can transform something where we can do something new and be part of that league of business? Or what
Yeah,
is the option?
yeah, 1,000% yes. Recently one of the major global consulting firms, Alvarez and Marcel, I believe was quoted in Wall Street Journal, if not, it was the Financial Times, one of the two. And they said in 3 years that over 50% of the doing of the work would be AI generated. I read it, I thought it was a typo. First I said maybe 5%, 15%, but over 50%. And it comes back to that age-old question, what will we be doing? I would offer up to you back when I was in public accounting, every year on January 1st, I asked myself the hard and difficult question, and it went like this. Why will I be worth more to my client next year? Why will I be worth more to my firm next year? Why will I be entitled to raise my hourly rate? And it's all in the belief of getting better. And even then, and this is 1990s thinking, it was all about being something more than an accountant, a compiler of information. And the great awakening today is we've gone from compiling data to now getting the finished product and being able to interpret it and talk to clients about it. So what were some of the courses I took back then that I would recommend accountants to take today? I took a course on strategic planning. I went to the American Management Association and learned how to be a strategic planner with clients. Now, closely held owner operator, smaller companies, you're not going to do a 500-page report, but you can do a one-page simplified strategic plan. I took a program from the Institute of Profit Advisors on how to advise clients on how to make money. Sometimes I have to say to clients, let's just pretend we're in business to make money. Novel idea, right? But there's a skill set. And where Brian came from one of the top business schools in the country and came out of one of the top accounting firms in the world, RSM. We haven't built out enough curriculum yet to teach us how to be a profit coach. Kuno, if I
Yeah,
was your accountant and all I did is gave you a financial statement and tax return,
yeah, yeah.
there's another firm that's going to call you tomorrow and offer to do it for half the price. But if I'm meeting with you monthly and talking about your profitability, you're not going to care what I charge you to make the financial statement or tax return because the value is so great. I could go on with these kinds of skill set builders. I took a course once from an individual named Dan Sullivan on how to become a coach, how to coach high net worth individuals, how to coach closely held companies. These are skills that I believe the most successful firms will harness and learn. And remember, I talked about the upper third, the middle third, and the bottom third? The bottom third and that middle third, I think to thrive and survive in public accounting going forward, what a great opportunity to transform themselves. So when they're sitting on January 2nd asking that question, why will I be worth more to the firm? Why will I be worth more to my clients next year?
Yeah.
They're building skills that they don't have today.
No, I agree, Alan. I think the kind of ecosystem which has been relevant, I think for long, not for last 10 years, must be 15, 60 years beyond also. We were supposed to do compliance or advise on tax planning, tax compliance, reporting, blah, blah thing. But as far as the business, creating a business value for our client from profitability to new opportunities, that's where I think the missing part was there. Even though some people within our fraternity was doing with but the percentage of the people is very small, I would say, as compared to the larger population is concerned. And like for example, if you say example, ask some technical person he can speak 1 hour in a meeting on a technical aspect with the business owner. When it comes to a business discussions or on the business side, he may be comfortable just 5-10 minutes or may not be also at the same time. So I think that's where the shift has to be a change. And I think coming to your first point, that where you said we are in the business of trust, and then we have a business of, I think our foundation is trust and relationship. So we have a trust and relationship. Now it is our, I think, responsibility, or we have an opportunity. We go to the table to our client and understand their requirement, and try to offer advice or business proposition, which can create new opportunities for the client, also for us also.
Yeah. But Brian, share with Kuno the story you were telling me about with KPMG, the fourth biggest global firm in the world, and I believe the eighth largest global firm in the world, Grant Thornton, who was their audit firm when the proposal, what went on there?
Yeah, I think this is probably a conversation we're going to have, so it's good to get there. It's part of the move away from billable hours, towards a value-based pricing system. We saw KPMG, recently negotiated lower audit fees from its auditor, Grant Thornton. They're citing AI made the work faster and more efficient. And this is what I always get thinking is, if the largest accounting firms are expecting AI-driven efficiency to reduce fees, I expect clients to expect the same thing from their own advisors. This is going to go into what the pricing models look like in 2030, and it's going to be a whole new world.
If I can camp on to that, I mean, this comes in the category of you just can't make this crap up. I mean, the whole world is seeing firm number 4 saying to their audit firm, we know the cost has dropped dramatically because you've got all these AI technologies going on. Therefore, in your upcoming proposal, we know that you'll reduce the fees dramatically. Here's what we know about commodity services, compliance services. And this is not recent news. This is now multi-decade. It's actually multi-century. If all you do is provide a compliance product and you wrap nothing else around it, whether it's industry expertise or some other value add, the marketplace will reprice our services. And if it's what we call a type 1 service, a service that a client doesn't want but needs, the lowest price will win. So talk about fear setting in the profession of what could happen. I would flip it the other way and say, oh my God, this is going to be the great enabler. And Kuno, I believe we're going to have major separation between highly successful firms that lead and price and bill for value, and the client doesn't care how they make the product because the feeding up here is so good. And I think we have firms, I don't want to say they have their head in the sand, but they're going to keep grinding and grinding until they can't. AI technology is not a button. It's a culture. It's a methodology. Paul Griggs, go all the way up to the biggest, one of the 2 biggest global firms in the world, PwC, recently said publicly, partners, your compensation going forward, a factor in it will be how much human work has been converted to the PwC AI methodology. And if you choose not to do this, I want to be very careful in what he said because I don't have the exact quote in front of me. But what I thought I read was, if you don't do this, not only might you make less money, you may not have a job. So this is happening right in front of us. And the speed of it, while it may not appear to be moving fast, it will. Kuno, you're one of the most foremost experts, authorities, companies on offshoring. I can remember as recent as 2019, 2018,
Yeah.
even 2020, where firms that used offshore were the exception, not the rule.
Yeah.
If I could draw a chart of offshore acceptance over the last 6 years, it goes like this.
Agree.
And I think that's what's going to happen with AI.
No, I think even AI could be a faster curve also. You never know the kind of speed and innovation is happening. So, Alan, just on the client perspective, obviously, I think we understand from our perspective, accounting firm perspective, AI, but from client perspective, a lot of things are going to change, like the implementation of agentic AI in the enterprise solutions, a lot of AI technology they are going to build on various modules and the function also, and a lot of maybe. The kind of expectation of the expectation on the our side is also going to change because they are going to transform. Say example, when we small accounting software to ERP, so that required a skill set or from the accounting side also. Now, obviously, on AI also is going to be a lot of things. Suddenly, you have to speak with agentic AI to get the information or whatever things has to be done in the corner. So, what do you see the change on that side?
Are you asking more the change of what we're going to see from a client deliverable standpoint,
Or in the
or
client deliverable side of
yeah? I mean, there are firms. We've got two different topics going on.
yeah,
One is an internal one of how the client delivers the product.
yeah,
The second one is a new service opportunity
yeah,
of offering AI related services, whether it's around governance, risk, transformation, controls, on and on and on. And we're starting to see more firms get active in that area. Um, that's going to be a fast growing area. Um, it's no different than 20 years ago when we went from in-person visits to look at inventory, and uh, we audited around the computer, around the technology. Now we audit leading with it. So it's going to affect the client, but at the end of the day, if I could only pick the one thing that matters, it's going to be a race of costs going down to deliver the product, but the offset being the increase in the value that clients are receiving. There is a major retooling, a transformation, a new awakening of the accountant. And while one could argue that that has gone on every decade over the last 4 decades, never ever was there something as significant as what this is going to do and accomplish. I think it bleeds into M&A. I think a
yeah,
reason there's an M&A frenzy going on, forget about private equity. I just think firms are looking at that investment and saying, oh my God, if I do it on the cheap, I'm going to finish last.
yeah,
I not only have to invest in AI, but I have to invest in AI with a discipline of industry expertise and service line expertise. And I don't know if I can buy that off the shelf. I need a competitive edge. So it's not just a technology, it's not just a deliverable. It actually gets into a capitalization issue.
yeah,
Where does capital come from in an accounting firm? It's profit that we could put in our pocket or leave in the business. When I was a newly minted consultant, and I was sharing this with Brian the other day, you can pretty much talk to partners about any topic you want. But the one thing you don't want to mess with is their compensation. And there have been more new ideas of how CEOs and leaders have found a way, if you will, to take money that the partners used to put in their pockets and bring it back and keep it in the business. One firm I call it has an innovation fund. And before partner comp gets divvied up, the innovation fund takes their cut. So all the compensation committee sees is what's left. So this mentality of how much to invest for how long and what's the probability of success if we do it on our own or combine with a strategic partner. So AI has worked its way not just into the capital, it's worked its way into the whole M&A equation. And probably a big reason that, it's been, Brian, you see this on the firing line with your clients, is sometimes they come to you and your aha moment last week to me was what? He said, Dad, it's amazing. Firms want to merge and be part of a PE platform, not just to unlock the goodwill of their business, it's because of the capital to build out AI technology. I'm thinking of the partner summit we were at in Nashville. Yeah, it's a new day.
So, Brian, let me put in a difficult scenario. If a managing partner of a mid-size or large accounting firm comes to you for you to get your idea or the way forward from AI impact point of view or AI strategy point of view, what will be your recommendation? And you will not be allowed to speak with Alan at the same time to give that suggestion.
I mean, I would tell them there's, more change happening, now than there has ever been. You saw, 2020 when private equity entered, the profession shifted a lot, and that change with AI is probably going to be a bigger shift. The things I would, tell them is that the value anymore is not in, preparing the work. It's not in preparing the tax return. The value is going to be in understanding, the client's business, trying to anticipate their issues before they happen, helping clients make better decisions and giving them confidence in their business and personal lives. I think that mindset, of we're there to be compliance providers completely changes. I think there's all other areas too where you got to, start getting ready for the future. I think that's, what we talked about on the billable hour. We ask clients the question of, if work has taken you 40 hours in the past, and now takes you 4 hours, and the client gets the same outcome, why are they going to continue paying at the 40-hour rate? So I think this turns a lot to, the future of value-based pricing, fixed fee engagement, advisory retainers and subscription models. The firms that, do well going forward are not going to be the ones that only, have compliance offerings. They're going to be the ones that have the niche specialization, wealth management capabilities, and other levers to pull them together. And if they have that, they're going to keep their clients and continue to get the best price. We say that pricing has never gone down. It goes up each year. It's the golden times of accountants as you continue to increase rates. I don't see the future of that changing, but I see, the way to allow them to continue to raise rates, that the mechanisms behind it is going to change going forward.
No, I agree, Brian. Sorry, Alan, please.
Yeah, if I, the tricky thing, and we've got a lot of parents on this call listening, and our kids always say, Mom or Dad, you can talk, but just don't embarrass me, right? So Brian has a friend, and I wouldn't even go close to touching the name or the firm, but it illustrates the thinking. And it goes like this. He says to us, we're out having a steak dinner, and he says to us, we say, what do you think about AI? And he says, I hate it. I said, well, why do you hate it? He says, well, I'm on the calls. I take the minutes for our industry team. And usually when the call ends, I get 4 to 5 billable hours summarizing the minutes. He says, now we have this AI feature that comes in And
Yeah,
the
got it.
call literally ends and 95% of my work is done.
Yeah.
And I said, time out, time out. I said, so you were billing 4 hours. What do you bill now? He says, well, probably just an hour because I only have to fact check a couple things. I said, let me ask you a question. Did the value of the product to the client stay the same, go up, or go down? He says,
Yeah,
well, candidly, he says, it's actually better because it actually picked up some things I missed, but more importantly, it attached some things to it to illustrate better some examples of things they were talking about.
yeah,
And I said, aha. So the quality of the product went up, but you're taking 4 hours down to one.
yeah,
And this is the mentality. There's three elements to this. Number one, don't charge less. You should be
yeah,
charging more.
yeah,
Number two, you're going to develop a better deliverable to the client, which will produce more fees. And number three, you've just freed yourself up to actually spend more time talking to the client rather than going on to the next four
yeah,
billable hours. So I could take this and just extrapolate it into 1,000 examples of the future.
yeah,
Fear. We've got to get this fear out of our head. Our dream has always been to be our client's most valuable advisor.
yeah,
Let's use technology. Let's use AI. It's
yeah.
the flavor of the decade. But
No,
let's use it in a way we've never used it before to unlock our skill set.
yeah, our value
To,
also.
I was just going to add, I always laugh about it. I always think from a client's perspective, if they say, well, my auditor or my, tax preparer did 16 hours or 25 hours. No, they don't care. They never really cared about hours. They don't want hours. They want outcomes. And the billable
Yeah.
hour knows the mechanism to get there. But no one actually cares. They care about, how great of an outcome it is.
No, I think I'll just take forward this example, and someone told me the client and the CPA was on the call on the Friday evening. There was an urgent, and they just not even they recorded that the discussion, and they were happy with the solution which the advisors were the CPA was providing. And he said, and then Monday morning, he just based on that recording, use some AI technology and prepare the note and send to the CPA that we really appreciate your effort and all that. We just need a sign off because certain thing has to be done Monday afternoon. The note is there. Don't worry, we'll pay you the full price. What we have agreed. It's just we wanted to achieve the timeline, and that's why we are sharing the note which you have explained us on Friday call.
We get a lot of questions of what thought leadership we read. And if I had to think of the last year, and Brian, you know where I'm going with this. Armando Hernandez, his firm is called H Co or H and Co,
Yeah,
based in South Florida, Miami. And if you can't find the article, go on our social media pages on LinkedIn, you'll see it. The header was the billable hour is dead.
yeah.
And he went on to talk about why there's no deniability. Yeah, Brian, what you're talking about is we've been rewarded for 140 years for inefficient work at a time where we have billable hour requirements.
Yeah.
And yeah, that party's coming to an end.
Yeah.
And the big winners are going to be the ones that have the prerequisite AI technology, bill for value, and have the time to advise.
No, I agree with you, Alan. I think as I speak with a lot of people, and my point of view is that, especially the people who are afraid or not ready to change, I say make a output based billing for next 2 3 years or immediately. Whatever, use technology, make profitability on a higher side, reinvest that money in terms of building new capabilities so that by next 3 years or 4 years, you have say deflation factor, any deflation factor on your top line. You have invested to build a new opportunity, and that could be a new revenue option for you.
You know, I can share with you that I'm more prepared than ever going on a potential client call than I've ever been. I'm embarrassed to tell you, in the old days, I used to show up. We have the best AI agent. It's a real human being. It's our chief growth officer, Lisa Benson. It's unbelievable the data and information that she provides us before we get on a call. It's almost embarrassing to me to say for 4 decades, I approached a potential client with no knowledge. I almost feel I get on these calls sometimes. I know more about them than I think they know.
Because they have not researched themselves.
Yes, yes.
So, Alan, if I can put the future hat on you and predict another aspect, especially from 2030 perspective, what do you think could be the deflation factor on the traditional side of the business and accounting firm is concerned? What do you think it could be? It could be 10%, 20% reduction, or what percentage you think?
So you're asking a question of what do I think maybe firm revenue will be impacted downward?
Yeah, on the traditional side of the work, especially.
And I'm going to answer it differently. I'm going to say it depends more on the firm and the investment they have, the strategy they have, the retraining and tooling they have. And where I'm going with this is historically, most accounting firms, we all looked at the trends, average partner equity compensation, average organic growth, average effective rate per hour, average revenue per equity partner. And I think in the next 2, 3, 4 years, I hate to use these words, but I think we're going to have big winners. I don't want to say big losers, but I think there's going to be a wave of firms that are going to get caught in the past. You know, the mentality always is we're the great follower. Let someone else take the risk.
Yeah.
And once it's all figured out, I just think this speed of change with what's happening, if you don't have an AI strategy and you're not already executing on it, you may want to think about combining forces with someone that has. The speed of change is moving that fast. Yeah.
No, I think, Ellen, I don't know whether you agree or not, but I think one thing which, not from our profession point of view, but I think in general only, if you see Big Four, the kind of, because of their size and scale, they were able to invest on a lot of technology. Let's speak about pre-AI time. So that was the differentiator for them. One of the differentiator when they were reaching out to the big clients, there was, I think their pitch was more on technology selling than the technical part is concerned, where the mid-size and smaller size was not able to cope up or may reach an. Now with this AI technology, there is I believe there it could be a level playing field where you can use that technology at the same level like before you was using earlier and go to the market and hit the clients you were not even thinking to go to them also.
Completely. Agreed.
No, I think that's where I think, as you rightly said, there is way to see half glass full or half empty. There's an opportunity there. How you see is only the difference.
Yeah. It's, everybody says there's not uh, uh, Brian and myself were on a panel at the Blackboard Technology, AI, it was
Yeah,
Tech Summit, right?
yeah,
And, Brian's question was like, if you had done a count, what was it, Brian, of the number of times the word AI was used or talked about, it's 98% of the chatter. In the US, they have the MFG meeting, the major firm group. It's the 75 largest accounting firms. When you asked what went on at the January meeting, and I'm sure the upcoming July meeting, it's all about AI. And I think it's moved from the theoretical to the real world.
Yeah.
You've asked me the question about execution. It's getting executed.
Yeah.
And many firms are deep in it to a point where they can now show you a timeline that in 4 years, all work will be done through AI technology.
Yeah.
Maybe it's 15% in year one, maybe it's 30% in year two, maybe, yeah.
No, I agree. So, Alan, I think since you bring on Blackhawk, one of the technology company in our field, so what is your take, especially example, obviously as we are professional service firm, whether we should tilt, accounting firm should tilt towards becoming a technology firm, or they should remain technology firm only, but use AI technology to serve their client in terms of, or they partner with some technology come, then have deliver services to their client. What do you think could be the right way, right model to work on evolving from or using the AI technology, or be a or for the clients are concerned?
I don't know. I have the answer to that. I just and Brian, help me out if you've got some thoughts. I just feel that in the consulting we do, every firm is different.
Yeah.
There's not a one size fits all. There are some firms that I would say have already evolved. They're advisors first. Client doesn't care how they get the work done.
Yeah.
And there's the other end of the food chain where there's no advising going on. And we worry about that one. And I don't think geography matters anymore. I don't think size matters. Clients today, the younger they are, it's interesting, Brian, when we talk to your peer group, they don't, when I grew up, they wanted the accountant down the street. So if they wanted to have breakfast on Thursday, we were there. It was a local provider. There are no more bricks and mortars. People don't care where you are. Owners of businesses in their 20s and 30s, they've never met in person their accountant.
Uh-huh.
It's all done through technology.
Yeah.
It's become a virtual world. So the answer to it is really a deeper question. The question is, when we dream about what we want to become and where we want to evolve as a firm, as an industry service provider, as a department, each one has a little bit of a different answer.
What is your take, Brian, on this?
And the first part of the question there on how do you build out those AI capabilities? I'd say there's three ways, and a lot of it comes down to capital there. And if you're PE funded or have the ability to go out and invest, I think a great thing to do is to go out and hire some great engineers, people who don't have a CPA background, but just very passionate engineers. Let them come in and begin to build out, your AI implementation across the organization. There. Regards to the second part of that conversation, I don't think anyone really cares how the work gets done. Alan always says, how they make the sausage. It's irrelevant as long as they have a good outcome. They don't care how it was done. The full agreement there.
No, I agree, Alan, with your point of view, and especially, and Brian also. I think these young people, their expectation and their style of working is altogether different. Than the era or the people, Alan, we have worked with. They wanted in-person meeting. These young people don't want in-person meeting. They just want result, solution, and no detailed technical discussion also at the same time. You give them the solution in 2 minutes, they will be happy. You charge them for the 1 hour, but give solution in 2 minutes. That's their expectation.
Yeah, I assume the poll that's showing up on my screen is showing up on both of yours as well.
Yeah.
I mean, it really tells the story. Look at this. You have a third that are saying, that the client will pay the premium. And you have 20% that they've already, I don't want to say thrown in the towel, but they just already see the writing on the walls. Fees are going to evaporate. They're going down. I mean, time doesn't permit us on this call, Kuno, but it'd be an interesting future one. The valuation, the value of an accounting firm. Can you imagine if you had a retirement benefit, deferred compensation, paid out to partners tied to the revenue of the firm? So you have a generation of partners retiring when the revenues are here.
Yeah.
And now that revenue declines and you're still on the hook for those payments when the revenue was here.
Yeah.
And as those words come out of my mouth, and that's clearly a devaluation of the business, probably not a sustainable deferred compensation or goodwill payment to retired partners. You have a time where others are seeing the valuations of firms 2x or 3xing.
Yeah.
I mean, you talk about every which way humanly possible. Yeah.
No, I think, Alan, that was my question also. I was really interested to ask you because I think you have done a lot of transaction on the accounting firm, and obviously you've been dealing with a lot of fees and all that. So obviously from a valuation perspective, so how do not say something which has happened in 2023, 24, maybe I think in 2026, how do they see the projection of the revenue? I think that's the
So,
biggest challenge
yeah.
must be there, and you must be facing that also.
So a little bit of breaking news here, if we can. Brian's working on a white paper talking about private equity in the accounting profession, and sort of it's like 100 days in. Here's what I'm seeing and feeling. So Brian, I won't steal your thunder, but in his research, what he's seeing is that a third of private equity firms that were bullish on entering the accounting profession now don't want to. They think it's the next business, industry, profession to get exploited, and the output is it's going to go the wrong way. You've got another third of private equity firms that are actually doubling down because they believe they have the solution to make AI a transformable way to get work done, and it's not an or, and deliver value to the client. And you probably have a middle third sort of taking it in, sort of undecided. Brian, bolt onto that, maybe camp onto that a little bit. Did it shock you? Because I think when you started as recent as March 9 of 2026, all private equity firms were bullish on private equity. And now you're having meetings where maybe not.
Yeah, I think you pretty much covered it. You hit on all the spots,
Yeah.
but it was shocking. I think since I started here, I mean, at least that first month or two, which I'm sure it's been like that for you for the past, since 2021. But we had a call with a private equity firm daily. There's a new taste. They had a new idea of how to get into it, and as recently, as 1 month after that call, they kind of said we're actually not interested anymore. I feel like this shift has happened all in the last couple months where because of AI and I don't know if it's all the coverage it's getting and the Wall Street Journal, but there's a lot of firms backing away. On the flip side, though, there's the other firms who do believe that they have the AI best case solution that they can implement across organizations, and those ones are doubling down. It almost seems like the firms that got in there earlier, were able to anticipate the change that was coming and start planning this, in 2022, 2023, are the ones that are much better positioned today. And going on a theme that Alan, you mentioned earlier, the big winners and big losers. Now, the big winners are the firms who could predict the future, make fast decisions, make bold decisions, and go after where they see the world heading.
No,
Please.
please.
Sorry. I just want to add to what Brian's saying, you talk about things that don't make sense. From 2021, when private equity came in, to up until a couple months ago, when we would say, what kind of practice areas are you looking for? It went like this. Well, this Office of the CFO, outsourced accounting, CAS, is the fastest growing, niche in our industry. We love that. Secondarily, we love tax.
Yeah.
More tax planning than tax compliance, but anything tax. And third, sort of like the stepchild, was a little bit of audit, only because there's more regulatory hurdles. There's less things you can cross-sell. There's probably a greater risk of maybe, getting sued. And today we're now hearing from private equity firms, and Brian, I know the exact example you're referencing here. The private equity firm, once they got the detail of the numbers and saw they had a heavy CAS, outsourced accounting practice, they said, we're not interested. And we said, why? And they said, because AI technology, that will be the first area, outsourced accounting, to get disrupted.
Yeah.
The second will be tax compliance. The last one might, in fact, be audit, because of all the regulatory things that go around it.
Yeah.
So it was two different thought processes.
To go
And almost
on that, it was yeah, the firm, hopped out because they were afraid of the CAS practice. However, the couple other firms there, they put in some higher multiples than they usually do because of the CAS practice. I think those firms are just better positioned to take it on, help automate it, and improve margins on that stuff. But they aren't afraid of it. They're very bullish on it.
So, Alan, what I was about to say, that's why I like people, non-CPA people to speak with. The brand use the word bold and fast. These are not the two words generally being used, Alan, in our people. If you say, if you say this, it has to be fast, it has to be bold, then you are not the right person to be in that party or meeting.
yes. So
That's the
true.
challenge I face. When I say fast, what do you mean by fast? It can be fast.
Yes. Yes.
So I think Ellen and Brian, I think we almost 1 hour 10 minutes already in this. I think it seems we have just started and there are a lot of things we can cover. But in any case, for the sake of the time, we have to keep the timelines. And the thing is, maybe I'll have last shout out to both of you. If you have to give predict, and if you are the managing partner of an accounting firm and you have to predict what will be there in 2030, what do you see how it will be? Brian, I'll start with you.
Yeah. I mean, I don't think firms are going to look the same at all in 2030. Kind of similar to how they don't look the same since 2021. I think the work itself is going to shift. I think compliance will still matter, but it's not going to be the primary differentiator. It's going to be the other things we've talked about: outsourced CFO services, data analytics, transaction advisory, wealth planning. I think there's going to be the question of, why do clients still pay for the accountant? And that's, they're going to have to be able to have services that truly matter to their business and personal lives. I think there's so much change happening now. So going back to those, bold and fast decisions, those are the firms who are going to be best positioned in 2030. The ones who could predict the future and start making changes today or where they see the world going. So I think 2030 truly belongs to the firms that combine great people with service offerings that their clients truly want with AI. It'll be a combination of those three.
No, I agree. You're right, Brian. Alan.
Brian said it. I don't know if I can add anything to it. It's, the hockey analogy: don't go where the puck is, go where it's going. And where it has historically been for 140 years is aggregators of data issuing reports and returns. And where it's going is clients wanting valuable, impacting advice and solving their problems and being in the business of providing value-added solutions. Size of firm, geography, industry, doesn't matter. That's the new day. So I do believe we're going to have breakaway packs of firms that are going to be uber successful. I think we're going to have some firms that sort of continue to stay in the game, but maybe do it on the cheap. And, I think we've all learned in business, you get what you pay for, whether it's one's billing rate or strategic investments you make in technology and talent and training. And I think there'll be a group of firms that they'll finally come to realize that their business model is no longer sustainable. The beauty of public accounting, as long as you don't do a bad audit or tax return, you can stay in the game
Survive.
forever.
Yeah.
But we used to call that the average firm, maybe the good firm.
Yeah.
That firm, it's like college. You can take a class, pass and fail.
Yeah.
I'm worried that segment of the firms is going to fail because they won't be able to compete anymore in a compliance only methodology built around billable hours.
No, I agree. I agree. I think Alan rightly mentioned. I think considering the kind of work or maybe regulatory things and all that, survival is going to be there for even the firms who are not going to be successful or loser also at the same time. But I think if I'm not sure who is going to the winner and loser, but from a data point of view, I think like for example, generally from global data point of view, it is 30% audit or 35% tax and balance is advisory. Just generally the composition is there. But I feel in 2030, the winner, the firm who's going to be winner or relevant, I would say, is going to the firm whose composition is going to be 70% advisory work, that too on the new advisory work, and maybe 30% all the past, all the other work which we will be otherwise doing as of now. And that's I think that's the composition is going to make the firms more relevant and more profitable also.
Agreed.
No, no, thanks, Brian, thanks, Alan, for your time. I hope you we had a great discussion and insight from both of you. I'm sure our audience must have enjoyed and a lot of takeaways. For the paucity of time, we are not able to take questions, but I have tried to cover their question during my our discussion so that they can get the perspective on their questions also.
And Kunal, we just want to thank you for including both of us, and more importantly, for all you do for the global accounting profession. If you're listening to this and this is your first exposure to this podcast, as much as we hope you found it of value, if you go in the library of all the podcasts that Kunal and his team have done an amazing job of, it's thought leadership at its finest. So thank you for all you do.
Is my honor to have this podcast or webinar with you, and especially with Brian. I'm otherwise excited because I'm really interested in speaking with people like Brian, not the public accountants.
Well, trust
Thank
me,
you.
I'm living that one. The clients
No, no,
are already saying
you are
like
exception.
we don't need the old guy. We want the young kid on the call.
No, you are the exception. I can manage you, but not the other people.
Thank you.
No,
Thank you. This
thanks,
was
Brian.
great.
Thank
Take
Alan.
care.
Thank
Thanks
you.
so
Really,
much.
really, really nice
Bye
speak.
bye.
Thanks for your time.
Thank you.